Next up, I'd like to call to the stage Paul Bennett. Paul is the Managing Director of Medallion Metals Limited, a role that he's held since 2016. He's a mining engineer who has extensive experience in the operation, development, and financing of resource companies. He's worked in both the technical and business development roles for numerous base and precious metals companies in Australia and holds a WA First-Class Mine Manager certificate. For 9 years, he was also a senior executive at RBM Resources, where he specialized in the provision of equity and debt financing for small to mid-sized resource companies.
Thanks, Katie, for the intro. Clearly not too many contrarian investors and those that are leaving the theatre at the moment. Medallion is an advanced gold and copper explorer. We've got a portfolio of assets with great potential down in the southern goldfields of WA. We've grown the resources there to 1.6 million ounces gold equivalent, and it's our ambition now to progress from explorer to developer and onto producer. And I'm going to talk to you today about what the Medallion team's doing to make that ambition reality. So, junior gold resource equities. This has been a tough space. It's a crowded space. It's been that way for a period of time. We're competing for capital. We're competing for attention with a host of other explorers. And I think these points, when they're taken together, are what set us apart from many of our peers. And the first one amongst them is that Medallion controls the majority of a greenstone belt in WA that's been proven to be fertile for gold and copper. These assets are rare. We're just scratching the surface of this one. We're confident that with continued investment over time, it'll demonstrate itself to be extremely valuable. The location's outstanding. There's 2 major resource projects underway in the local government area. It demonstrates you can permit, you can build, and you can operate a mine in Ravensthorpe. We've got scale, we've got grade, 1.6 million ounces at 2.6 grams. That deposit's at surface, it's shallowly drilled, it's open in multiple directions, it continues to grow as we continue to invest in it. The asset's de-risked, we're on granted mining leases, we're clear from a heritage perspective, we've advanced the permits substantially, there is a PFS underway to demonstrate the technical and the commercial merits of the asset. We're active on the ground, we're focused on maximising dollars into the ground. 54 kilometres drilled so far, more to come to grow the resource and advance the exploration targets. And all of this is being done with that strategic objective of establishing that critical mass of metal to build a mine. Now, we're confident that Cundit Mining Centre can yield that critical mass. We think it's between 800 to 900,000 ounces gold equivalent. It gives us that opportunity to target that 100,000 ounce per annum run rate. And then the regional opportunity, the near mine opportunity is just upside from there. So touching on corporate, there's a capital raising underway at the moment. It'll settle in the next 24 hours. So what you're seeing up here is on a pro forma basis. But I want to thank the joint lead managers, Canaccord and Morgans, for helping us get that done in what is a tough market. When the dust settles on the raising, there'll be 307 million shares out. We'll have a cash balance of just a touch over $4 million. We've got an investment in our neighbours Nickel Search. There is a loan from our major shareholder. It's only repayable in the case of a change of control event or if we make a decision to build the mine at Ravensthorpe. We've got a market capitalisation of circa $22 million. If you adjust for the cash, the debt and the listed investment, then it backs out an EV of $20 million or $12 an ounce basis the current resource. Now, we think that's a steal given the quality of those ounces. Here we are amongst a basket of our peers. That peer group is ASX-listed explorer whose principal asset is gold in WA at a pre-production stage. Now, we screen pretty well in terms of grade, we screen pretty well in terms of scale, and on the face of it, we're located at the wrong end of this curve. Now, we think this situation's persisted for some time. It's extremely frustrating, but there's no point in grizzling about this. All we can do is focus. The market's got its reasons. All we do is focus on growing these ounces and de-risking them. And as I think we do that, as we think we continue to build confidence that that metal can be commercialised, then we move to the left of this slide. Now, you don't have to believe me. There's 2 analysts that are covering us at the moment. I'm sure their price targets are under review given the capital raising and other things that are going on. But the last time they published research, the consensus valuation would have placed us with a $70 an ounce resource multiple here and definitely at the other end of this curve. So even if they're half right, it's apparent we represent a compelling opportunity from a valuation point of view. So focusing in on the flagship asset, the Ravensthorpe Gold Project, Medallion's got the dominant landholding in the Phillips River mineral field, and critical to that are those tenements that straddle the Annabelle volcanics, which are mapped in yellow in this slide. Now, it's these rocks that have hosted all of the historic production and are host to all of the known prospects and the known resources. They're also the host to the pegmatites that Allchem are mining at Mount Catlin at the moment. Now, there's been approximately 130,000 ounces of gold and 20,000 tonnes of copper metal produced from this area over the journey. In today's prices, in gross metal value terms, that's a rough 50-50 split between the gold and the copper. So we think copper is going to have an increasingly important role to play in the Medallion story going forward at Ravensthorpe. We're certainly seeing that in the drilling at depth at the Cundipp Mining Centre. Now, it's at the Cundipp Mining Centre, which is at the southern end of the field where the Archean dips beneath the Proterozoic and continues on to the south. This is where the bulk of the activity, the bulk of the expenditure, the bulk of the drilling's taken place, and it's where the majority of the resource growth has come from. Of the 54 kilometres that we've drilled, 49 kilometres have been at this asset. We're focused on maximising the dollars into the ground here. That's what you'll get with Medallion, dollars in the ground, high-grade resource growth. And as you'll see, if you invest in this asset, it will deliver. Zooming in on the Cundipp Mining Centre. So the gold-copper mineralisation at Cundipp and across the field generally is not typical of orogenic WA gold deposits, and the most obvious difference is that it has the copper. Now, we think the closest analogy is Deflector, specifically as it relates to the mineralogy. Obviously, Deflector's been a standout success story, and from that we can see that there's an opportunity here. So we think there's a similarity between the two assets at a similar stage of life. Deflector's obviously gone on to be a fabulous success, great production profile, great cost profile, it generates a lot of cash, and that's the kind of outcome, that's the kind of performance that we're seeking to replicate here. Now, Cundipp itself, it is a strongly mineralised, moderate grade gold and copper system. It occurs in multiple directions. It's got low grade variability, it's got low geometric variability. If you look at our historic announcements, you don't see bonanza gold grades, but what you do see is consistent and economic grades and widths. 2, 3, 4, 5 metres at 5, 6, 7, 8 grams per tonne. I've mapped the 10 and the 20 gram hits in the deposits here in this plan. You can see they occur throughout the ore bodies consistently. These are the grades that drive the project economics. That low variability leads to low coefficients of variation in the gold domains, minimal top cutting. We think that leads to a lower risk resource estimate and then by extension a lower risk mine plan. The ore bodies are shallowly drilled, they're at surface. Average depth of drilling here is 100 metres, deepest hole into the system's 370 metres, it's open at depth. The ounce per vertical metre profile averages 4,000 to a depth of 300 metres. We're adding metal along strike, we're adding metal as we drill. If we could achieve and maintain an ounce per vertical metre profile of 5,000 here to a depth of 500 metres, which is still shallow for an Archean gold lode, then this area starts to get really interesting in terms of its scale and its significance. We also think there's multiple opportunities to find new lodes within this granted mining lease boundary and at depth. Those lodes are projected to intersect along strike, and in some cases at depth there's the opportunity to find new lodes beneath the remnant Proterozoic cover here, and we know there's gold in the bounding tonalite. So all of those opportunities exist within a 1.5 kilometre radius of where you might locate a processing plant here to treat those existing resources. It's a great address, it's got great potential. We think multi-million ounce potential over time with continued investment. That was the arm waving. What have we actually got on the books? We updated the resource in January. It was based on 44 kilometres of new drilling. Gold resources now stand at 1.3 million ounces. The silver's there on a rough 1-to-1 ratio with the gold, 59,000 tonnes of copper. On a combined basis, that's 1.6 million ounces gold equivalent at 2.6 grams. We've over doubled the metal inventory of the resource since we got going in March of 2021. There's a high degree of confidence in the resource estimate itself, 63% in the indicated category. That's roughly 1 million of those gold equivalent ounces. 3/4 of it are within 150 metres of surface, so potentially available for open pit mining. Pleasingly, the grades have held up. 1.8 grams gold in the open pits, 4 grams gold in the underground gold domains with a significant copper credit. Gold's driving the project economics here. Copper enhances it, particularly below the top of fresh rock. Every metre that we drilled added 20 ounces into that inventory, and every ounce that we added cost us $15. Now, that was a great business when we were valued at $30 an ounce. Find them for 15 and get valued for 30. At the current valuation, it's not quite as attractive. It's one of the reasons, it's not the only reason, but one of them why we've begun to focus on de-risking the ounces we've already got in the books instead of trying to extend them, which we're confident you could with continued extensional drill programs. That's the quantity of the ounces. What about the quality of them? Can you generate a margin off this material? As the PFS advances, we're seeing the mine plan take shape. We'd love to report the diluted tonnes and grade. That work's completed, but unfortunately that's difficult without the overarching PFS there as well. So what I'm showing here is the finalised mining voids for the study, the open pit and the underground, and what we're seeing is that we are very confident we'll achieve that critical mass of metal that'll be presented to the mill. We think it's predominantly an open pit mine over the life of the project. The underground mines are supplementing the feed over time and at depth. A significant portion of the mine plan is derived from indicated material. A significant portion of the mine plan is oxide. Moderate grade, moderate strip ratio, moderate depth of workings here. We think that bodes well for all-in sustaining costs. When we're thinking about the mine plan and risk in it, we're interested in the headroom between the cut-off grade and the head grade. So this is an exercise in optimising for margin, not necessarily maximum NPV. So we're seeing that continuity in grade, we're seeing that continuity of structure. Importantly, we're seeing that the ore bodies can withstand the dilution that they'll inevitably confront when it comes time to mine them. So a lot of work to do here, but we're confident we'll report the results of the PFS in September, and it'll demonstrate the asset's got a very bright future. So we're starting to see the opportunity at Ravensthorpe and for Medallion really take shape. As the PFS advances, we're confident it's imminent. We're confident it's going to demonstrate a very strong argument to continue to advance this asset towards a final investment decision, and noting that there's a huge amount of work that we have to do to get from where we are at the moment and to that point. But then there's the additional growth options as we continue to drill. The extension and the conversion of the existing resources gives us opportunities, gives us optionality to look at either increasing the production rate or extending the mine life, or both. And then in addition to that, we've got the near mine opportunity at the Cundup Mining Centre and the regional opportunity more generally. That gives us potentially game-changing outcomes. We're really only scratching the surface at Cundup and across the field more generally. So flagship asset is the Ravensthorpe Gold Project. It's inclusive of a cash-generating camp, 90-person camp that's operating in Ravy at the moment. It's our focus. That's where the bulk of the attention and the bulk of the expenditure will be in the short to medium term. In addition, we've got the portfolio assets. We've got an investment in our neighbours' nickel search. That gives our shareholders exposure to potential new nickel sulphide discovery. We're really excited about what the management team there with that ground holding in the underexplored Carlingup terrain can yield. And then there's the Gerda Cut-Up project. It's over half of our land holding down in Ravensthorpe. It is the entire accessible portion of a sedimentary basin and has been proven to be fertile for SEDEX deposits, as evidenced by Trilogy, the JORC compliant resource shown there. That is a significant accumulation of metal right at surface, and that regional bedrock opportunity really hasn't been tested. So multiple routes to value, and then that strong foundation where we're looking to return Ravensthorpe to being an important gold and copper producer in regional WA. And we think if we can achieve that outcome, it'll be to the great benefit of our shareholders and to the local community. So to wrap this up, we think Medallion represents a compelling opportunity for investors who are looking for exposure to advanced gold and copper exploration in WA. The business is well run, we're attractively priced relative to our peers, we own assets with great potential in a great jurisdiction. The PFS is imminent, the resource continues to grow as we continue to invest in it. The near mine opportunity, it'll get tested to some extent in coming months, The regional exploration opportunity, capital's tight. We can't chase that as hard as we'd like, but it's real, it's extensive, it's not going anywhere, and it represents tremendous upside. So if you haven't done so already, I'd encourage you, come and take a closer look at Medallion, come and see us at the booth, visit the website, get on the mailing list, follow us on socials, contact us directly. We're always keen to talk about what's happening down at Ravensthorpe. Thanks, everyone.
Thank you, Paul.